Hi, everybody. This is Joe Perry from ForexAnalytix, and myself and my team here are here today to give you a rundown of some of the things in the FX world that we are looking at today, and hopefully we can share some insights with you and give you some ideas going forward into the election, into the U.S. fiscal stimulus, and into Brexit to hope to maybe give you some ideas of what to expect when we come out on the other end. With me today, I have Blake Morrow, Steve Volgaridis, and Stelios Kontos. So I'm going to start with Blake because Blake usually has to run off pretty quick for another meeting. So I'm going to put him on right now, and Blake will be able to go over some things with you, and then I'll be back in a little while. So Blake, are you here?
Fantastic. Great. So thanks for having me, and I hope you guys are having a great session. It's, I'll tell you, Joe, it's been, it's choppy, and I have a feeling that as we head into this, the U.S. election, we're probably going to be drifting. One of the things I'm looking at with the S&P is probably, as we drift lower in this, what I call it's a descending channel. I know we broke the 3,400 level. We're really struggling to get back above 3,400, or really 3,410, 3,420 is what we were looking this morning on our daily webinar. By the way, we do have a daily webinar that's free. If you follow me on Twitter, Pipzard is my Twitter handle. Anyway, we've been, we've been hosting for, well, I've been hosting for about 15 years a webinar every day that's free. So as we talked about this morning, this was going to be a struggling point for the S&P, but what I feel is that, with the markets looking ahead and looking at possible contested election result, and with, stimulus quite possibly having to wait until after the beginning of the year, markets will probably, in a choppy fashion, pull back a little bit. Jasper said the echo is really bad on my side. Is it bad for anybody else?
I don't notice the echo at all, Blake, on my side, where I am.
All right, yeah, so I'm not too sure how to help you, Jasper, as far as the echo goes, because I am only broadcasting from one location. Usually if I'm trying to listen in at the same time, it'll give you that echo, but I'm not doing that at this moment, so I don't know what to do to assist you, but you might want to fiddle with your outputs, which you should have a toggle or be able to do so from your end, and direct the sound into whatever location you want it to go to. Anyway, getting back to talking about the election. First and foremost, there's a couple big outcomes that I think will move the market, and we got to talk about that because even though I predominantly trade currencies, it's important to understand what we're up against from a risk reward and risk on, risk off standpoint. And right now, I believe that the markets have been higher over the course of the last couple of months, especially the last couple of months, pricing in a potential Biden win, and what people have been referring to as a blue wave. And if you're not in the United States, I'm going to try to articulate a little bit more of an explanation on what that means. And by the way, just so you all know, I'm no political expert, by the way, and I'm not going to try to, give you my political bias either on this webinar. But it's important we talk about it because the outcomes could be completely different based on who wins. Anyway, going back to what I was saying, a blue wave would be where you have Biden, who's a Democrat, and they're the blue Democrats would be blue. A blue wave would be the Democrats also retaining the House and the Senate control, which is a big risk for this election. It's not just about the presidential election. I think Trump, being a Republican, which would be red, I think he has a much better shot at winning than people believe. And even if he doesn't win, the risk is that he could contest the results, especially if the race seems relatively close. And that I do expect. I expect the race to be pretty close. Whether he ekes out a win or whether Biden ekes out a win is to be seen. But I do think the race is going to be pretty darn close. And so what that means is the risk of the election being contested, especially if he loses, is high. And that means we could go into a state of, between mail-in voting and everything else, we could go into a state of like limbo for a couple of weeks where the market doesn't know exactly what's going on. And that is, I think, the biggest downside risk to equities at the moment. Okay. So, we get a contested result and, we might trade below the 200-day moving average in the S&P. Now, flip side is we get Biden wins handedly, and it's to a point where he can't even contest it because it's let's just say it's a 60%. Looks like he's won by by a landslide, if you will, and he doesn't contest it. Then we might get that what you call blue wave. So we'd have to watch the Senate race as well. And with a blue wave, that's when we can start pricing in a lot higher equity markets, inflation, because, Democrats will basically not only have the presidency, but also rule both the houses, and they will probably unload massive amounts of stimulus into the market or into our economy and the U.S. economy, and that's going to help stocks move higher. That's going to help inflation move higher. The dollar should break lower in that situation. One of the results that I think is probably most likely is that we have a Democratic run Senate and House, because I think a lot of those seats are going to be taken by Democrats, and Trump will probably win the presidency. If I had to give you my base case scenario, I think that's where we're at. There's going to be a contested result. Trump's going to end up winning, but we're going to have a Democratic legislation, if you will. So that's going to be a problem for stocks. I believe that stocks will actually go down in that scenario. And the reason why I say that is because it's going to be very difficult for President Trump over the next 4 years to get things done and pass things that he wants to pass, whether it's stimulus or, it's going to be difficult. So, and I think that, and plus with Trump as president, he's probably going to start really, really going after China again, and probably the EU, some of our, other trading partners. So I think that situation is more of a risk off for the markets. And that's not what the market thinks right now. The market is more in the tune of, hey, if Trump wins, we're going to get a repeat of 2016, and you're going to see one of these again. We're going to see a big rally in equities like this from 2016 on. We're going to see another one of these. I actually don't believe in that. I actually believe it's going to be more the opposite. We're going to probably trade back down towards 2,500 or somewhere in that neighborhood. Now, the reason why this is so important is because we have to think what we want to do with currencies, and the dollar index is really flirting with a big support level. It's a multi-year 2011 on trend line here, and let's just talk about like that blue wave, that Biden win. Yeah, I think the dollar is going to get smashed. I mean, that means the euro is going to trade up towards 125 and maybe even higher than that in the months and years ahead. But the flip side is if we get risk off, you will see the dollar strengthen, because the dollar is strengthening not only because it's risk off, but because chances of us being fiscally loosey-goosey is not going to be as easy. And so the dollar will probably strengthen as a result. So if you're looking at the dollar index, and this is a weekly chart, let's go over to the daily chart. I think it can very easily be identified what direction to trade the dollar based on what happens here. So a move above 94.50 in the dollar index, which is the previous spike lows post-COVID, right? So that would be this level right here, which is 94.50, or a break of 92 which that means we're taking out the trend line. So you could say, break below this support would be bearish. So, I think we have our levels identified with the dollar. I think the dollar is clearly outlined which direction we're going to go, or which direction would be easiest or the path of least resistance to go to, following the election. It's going to be messy, guys. And I'm going to say this, and I want to say this because I care for traders. I know most of you don't know who I am, or maybe you don't listen to me on a daily basis, but if you listen to any of our free webinars that we've done for the last 15 years, one of the things that not just myself, but the rest of the ForexAnalytix team that you're listening to, we've just tried to reshape the bell curve on, successful traders over, successful, traders in the market, because it's a tough business. It's a tough business. I've been trading since the mid 90s, since 1996. And I trade for a firm now, and it's not easy. And so I do care. I care for our traders in our community, in the ForexAnalytix community, and I want everybody to be successful. And so one of the things that I'm going to tell you is be really careful over the course of the next couple of weeks. Trade smaller than you normally do. Don't trade, in big size, and wait for those levels to break. Now, whether you're, I don't care if you're looking at the same levels I am, or you're looking at something completely different. Let the market come to you and let the market do what you anticipated it to do, rather than trying to be reactionary based on something that's happening. Because that's very easy to do, is to fall in the FOMO trap, the fear of missing out trap. It's very easy to do, especially over the course of the next couple of weeks. I do have a feeling it's going to be extremely volatile. The market's going to be extremely choppy. And election night, we're not going to know. That's a week from tonight. We're not going to know exactly who's won, who's not. So just trade carefully, because this is the time that you can make a lot of money, but you can sure get yourself out of the business really quick too by losing a lot quickly. So my 2 cents is please be careful and really look for and know where your parameters are. What I would suggest that you do over the course of the next few days, and we're going to be blogging about this, so just follow us on Twitter and social media to read our blog. We're going to be blogging some different scenarios going into this weekend on what we're looking for and what should move the market, but that's not set in stone at all. And obviously our word is not gospel. It's just these are our ideas going into into a very volatile, what could be a very volatile time. So it's going to be important to do your research, figure out, okay, I want to do this if this and this happens, and then plan for it. And if it happens, then take a trade. And it's okay to be wrong, just don't stay wrong. That's my best advice I could give to you at any point in time. It's okay to be wrong, just don't stay wrong. And for those of you that aren't ForexAnalytix subscribers, you should try it out. It's only $1 for 10 days. So heck, if you tried it out today, you could be testing it through the election. But this is our chat room. If you want to see, like, I'll just give you an example of, this is our entire day of chatting since I woke up 6 hours ago. Let's see. Still going. I mean, this is since 6 hours ago. This is when I got up, basically, somewhere around here. Yeah, like somewhere in that neighborhood. And you can see all the chatting that's been going on. That's where we're at. So if you want to come hang with us, you're more than welcome to. All right, Joe, I'm going to have to pass it over to you because I have to do the daily roundup webinar for all of the ForexAnalytix subscribers. So hopefully that gave you guys a little bit better idea of what I'm thinking going into the U.S. election. I'm gonna let my colleagues Steve and Stelios and Joe take over and talk about maybe some specific ideas that might be brewing.
Hey Blake, thanks. And thanks for hanging out for a little bit and stopping by.
Appreciate you having me.
Stelios, Steve, you guys there?
Hello, can you hear me?
Hey guys, how's it
We're
going?
here.
How's
Good,
it going?
great.
I'm going to stop sharing, so this way you guys should be able to take control now.
All right. Let me
Thanks,
All right,
see.
Blake.
guys. Have a great one. I got to go because I got to start the other webinar.
You do,
Okay.
mate.
Go ahead.
Thank you.
Thanks, Blake.
Steve, do you want to take the screen and then I can, we can chat a little bit and then
Gladly, although the share button is not highlighted for me. It's grayed out.
Let's see. Where is the share button?
Any chance that Blake has to pass it?
Blake does have to pass it.
Oh,
Blake, are you still here, mate?
He's gone now.
interesting.
Blake is gone, so let's see who has it now.
Any chance it went back to the FX Street host?
Maybe. I see it as I think I'm the presenter right now.
Hold on. I am the presenter now. Okay. So
So you want to pass it to Mr. Leo?
Yeah, hold on. Let me share my screen first, and then I will pass it to assign control, make presenter, Steve Vulgaridis. There you go. Okay.
Yeah, now I can do it. Okay, perfect. Okay, great.
Okay, cool. So, hi everybody. I think we should talk for a few minutes about the general situation. My name is Stelios. I am I want to say the macro guy at ForexAnalytix, although all of us have our own macro views, but I tend to look a little bit further out, and my horizons of my trades and what I do is a little bit further out than the other guys. So the main event, clearly the U.S. elections, just like Blake said, and there are many scenarios that are playing. I don't think we can. It is debatable, but I don't think we can trust the polls that say that Biden's going to have an easy victory. We've seen what happened last time round, and also very important, we will not know. Most likely, we won't know who's won for a few weeks because there's two ways of voting. One is mail-in, one is in person, and it seems that the majority of people who are going to be voting for Trump are going to be voting in person. At least that's what polls say, and that's what people say. And probably 50-50 in terms of Biden's supporters are going to be voting by post or in person. So I think it's quite likely that the initial results that we're going to start seeing are going to be tilted heavy towards Trump. And then as the mail-in ballots would get counted, then we're probably going to see a shift the other way. But bottom line is, I think my base case is that it's going to be a close race. And there's all sorts of questions that are going to be asked, especially what Blake said, if there's going to be a blue sweep or not. Because if there is any kind of contested result, or Biden gets the wins but does not control the Senate, then things get complicated. So my view in terms of a medium-term view, not a week or 2 weeks or 3 weeks from now, is I have been bearish the dollar. I am still bearish the dollar, but I think that there are now many reasons why the dollar can spike in the short term. I've been saying to all our ForexAnalytix members that I was bearish the dollar from when the DXY was 98, 99, and is now trading in the 93s or even lower. And I still think that there's going to be more downside simply because there's massive deficits. There's going to be loads of monetary easing. You're going to say, of course, most economies, most Western countries, most central banks are in deep easing mode. But the thing with the U.S., I think, is a little bit more pronounced than the other major economies, and I think
especially the fiscal position is much worse.
Agreed. So I think there's going to be a lot of monetary easing. There's going to be big deficits to be funded somehow, for a long time. And unfortunately, the way things have been going for the past decades, 2 or 3 decades, is when times are good, then the economy, they make small deficits. When times are bad, they make huge deficits. Well, that's not the standard economic theory, right? It should be the other way around. When the economy is doing well, they should be surpluses. The the governments and the treasury, they should be putting money aside, prudence, et cetera. Well, that's gone out of the window for the past decades. So I think to come back to my medium-term views, I think the dollar is going to go lower, but I think there is a chance it's going to spike. And is it going to be? I don't know what the trigger is going to be. Is it going to be a contested election? Is it going to be another? We're seeing COVID flaring up again everywhere. Today we just had. I know it's a small country, but we had big record number of daily cases here in Greece, and the same thing is happening in Italy and Spain. And I was reading today that in Italy there are now protests against the measures that the government is taking. It's a big mess out there, and for stocks to be near all-time highs, it just makes no sense to me. Obviously, with all the monetary easing and the loss of purchasing value of the dollar and the resulting asset price inflation, of course, you close your eyes, 20 years from now, indices are going to be higher. I think that's a given. But I think there's a lot of complacency once more in the markets. And I do think that there's going to be a leg lower in risk assets. And I think the VIX is something that's showing that, because with the VIX above 30 and the market's so close to all-time highs, it just doesn't connect. Something's got to give. So I think we're going to see a leg lower, and that should take metals as well with them. I'm a huge fan of gold and silver. I think in the medium term we're going a lot higher. And for people who have been ForexAnalytix members, they will know I've been long for the last 2 years or so in silver, spent about 18 months doing nothing, and then suddenly went up 50%. So, I was lucky enough to catch that move. But this is something that I will be looking to get long again, both silver and gold, but at lower levels. I've said this before on our webinars. I think silver around 21 is a good place to really start loading up. And gold, I think, will test 1800 again. So that's something else that I'm looking at. But in terms of currencies, I think the main one is the dollar, which I am still bearish. The pound is an interesting one as well, because as everybody knows, we are now, in the last 2 months of Brexit negotiations. The UK is leaving the EU. The question is under what terms? And they've had 4 years to come up with something, and suddenly it's now being crammed into the last 2 months. But either way, I think both sides have vested interest to actually get something done, and I think they will get something done. And the testament to that, I think, is something we heard late last week from some EU sources, that there might be a compromise on the EU side regarding fishing rights. And I know that sounds like a small thing, but it's been really the main sticking point now. So I think if there is some kind of a compromise on that, then there will be some kind of deal overall. Is it going to be a good deal, a bad deal? I really don't care. I just want the uncertainty to go away, and I just want, for the bullish sterling scenario, I want the hard Brexit no deal scenario to be off the table, and I do think it will be. One thing's for sure, the market is currently pricing a good chance of a no Brexit deal. It's still not, it used to be around 50-50. I think it's probably a little bit less now, but it's still, it's still the pound, the levels of the euro pound and cable are still at the levels where I think there is a chance. They are pricing a chance of a no deal Brexit. So no matter what happens, the pound is going to move. My theory and my view is that it's going to move higher. Now, how much higher, I don't know, but I think I have been waiting for euro pound to get to 92 to short it. It hasn't got there. Maybe we'll get the chance within the next week or two, but that's my level to start getting short euro pound. Otherwise, what else can we talk about? We talk about indices, metals. Things like yeah. Go ahead.
I got a question for you. If you had to put percentages on the extent do you think that the election results may drag out, or we may have something definitive the next day, what would you put those percentages at?
Oh, I think that, to get something definitive, the next day will mean that there's going to be a landslide win for Biden. I don't see the other way. I don't see Trump winning by a big margin. There are people who think that this might happen. I agree. I think however, I think it's like a 10-20% chance max. That's my view. Okay. I think it's going to be close. I think it's going to be close because, at the end of the day, just like last election, you see Trump supporters, they come together. There's a word in Greek which I don't know how to translate. Sispirosi. Do you know how to say that, Steve. Anyway, they tend to come together. So I think we will see a much closer race than people think, and that's why I think the probability of that scenario is low.
Okay, very good. Thank you.
No problem. Yeah, otherwise, in terms of currencies, commodity currencies like the Aussie, the Kiwi, the Krona, the Norwegian Krona is one of my favorites. I think they are vulnerable, in the short term, because I think there probably will be a dollar squeeze. I think they're going to be vulnerable to a dip. But as I said with metals, I think that it's going to be a buying opportunity. That's what I'll be looking at, and I'll be focusing specifically on the Norwegian Krona, which I have been trading quite a few times over the past 4 or 5 years, always on the long side. So I'm buying Krona, so I'm basically selling dollar Norway or selling euro Norway. I like those trades a lot, and I'm waiting for a spike to get onto those as well. The Aussie and the Kiwi are a little bit trickier. They have a big dependence on China because of their exports. The Kiwi in New Zealand, I really like the way the government has been handling the whole COVID outbreak. So I think that's something in their favor. But overall, their dependence on China is just too big for me. So it will depend on how things go there, and particularly with US-China, which is going to come back to foreground. We all know that. The negotiations. Is it going to be Trump handling it? Is it going to be Biden? Don't know, but that's going to come back to the to focus, and that's going to be affecting greatly the Aussie and the Kiwi. And that's pretty much it from me. I don't have much else to say.
Both of them, by the way, are maintaining more or less their prior gains. I mean, they're doing very good. Aussie, Kiwi. I mean, they've in essence spent the past few weeks just consolidating, which is quite astonishing in the sense that we have had in essence no correction lower, just a consolidation. So for the time being, from a technical perspective, there doesn't seem to be some bearish case scenario that we can talk about at the moment. Now, that all changes if the Aussie breaks through 70 cents or the Kiwi breaks through like 65.50, in which case we're going to have a lower low after a long period of time that we haven't had one. Now, obviously, Stelios, as you mentioned, the chances, if we get some type of a scenario that's risk negative, the chances that they won't be affected at all are quite limited. So, that's more or less a given. But even the days that we've had, like, price action was bearish in the stock market, they've held up quite nicely. So,
I agree.
That tells me that sooner rather than later, they will actually continue their way higher. Which also which is also a testament that probably the dollar is nowhere near finding a bottom. It's actually like, if you notice the last 4 or 5 days, it has been consolidating. I think most probably getting ready for another leg lower once it breaks through 92.40, 92.50. I think the next stop is going to be at 91. The opposite can be said because, of course, they're very highly inversely correlated for the EURUSD. The EURUSD has been consolidating for a period of time, but I mean, look how well it's been holding its gains. I don't think this is about like to turn lower and accelerate. I think that eventually it's going to continue higher. You mentioned some of the reasons why this might be the case. Be it fundamental, be it technical, I think that the path of least resistance for the dollar is lower, and for the EURUSD and the vast majority of the dollar-denominated pairs is higher. Now, having to do with stocks, since we talked about them, so far the move lower doesn't look in any way impulsive to me. We did have quite a strong negative day yesterday, but I mean this this move lower, which has been unfolding during the past almost 3 weeks, has been contained in this channel. There is even one bullish case scenario from a technical perspective somebody can see here is the potential of forming here a cup and handle formation. So something like this, right?
Yep.
In which case, a break to new highs, so a break above 35.89 should target, what's the range of this? It's like almost 400 handles. So that should point to close to 4,000. Now,
Steve, I was just going to say, I actually had that drawn as like a continuation inverse head and shoulders pattern.
No,
we pull back to the neckline
it's more likely if it's a continuation, it must be looked as a potential cup and handle formation. It's at the best case scenario contested if head and shoulders formations are continuation formations. The vast majority of technicians will disagree with that view. By
definition, they could be both.
By definition, they could be both. According to some books, according to some others, they can't. They're just reversal formations. Right. But in any case, for the time being, if it turns higher from here, it looks
both point higher.
Yeah, yeah. But in any case, for any of that to be triggered, we need to see a new high, and I think once that happens, we should see acceleration to the upside. Now, I'm not going to go through the rest of the US indices because, with the exception of the IWM, which hasn't even managed to claim new highs, since the all-time highs still found, if you go back to September of 2018, just before the repo market imploded. With the exception of the Russell, which I think tells more of an honest story of what's happening with the economy, the rest of the US indices look, more or less the same. Of course, the Nasdaq has been overperforming. I mean, the Nasdaq even so far year to date has had a massive rally, which is, unbelievable considering what has happened during this year. But we can go through, before we go to the precious metals and some of the commodities, we can go through and have a look at the DAX, because the DAX does look somewhat different. First of all, the DAX has been diverging in the sense that exactly as the Russell, it has not produced a higher high. But also the move lower has been, rather somewhat stronger. Of course, it can still be corrective. I'm paying very close attention to the level we're testing at the moment, 12,000, for a couple of reasons. Reason number one is because it's the quality target of the first leg lower to the second leg lower. Second reason is because it's a horizontal support resistance area. So I'm really curious to see if the DAX holds 12,000. I think if it does hold here, it can actually resume to the upside. If it breaks through here, I think it's going to go at least towards 11,500, and we see what happens from there. Now, the FTSE is a totally different story because the FTSE more or less depicts the uncertainty we were talking about having to do with the Brexit. It has had a prolonged period of, in essence, doing nothing. You can see this within this descending triangle. We've had, what is it now? How many months of a consolidation? I mean, from June to today. So it's like June, July, August, September, October, almost 5 months of basically coiling. So I do think this is an interesting formation because at some point the FTSE, either if it breaks lower or if it breaks higher, I do believe there's going to be a lot of pent-up energy, a lot of dynamic energy, accumulating in the system, and I do think it's going to end up accelerating in whichever direction it decides to break out to. Now, unless we have specific questions, I'm going to go for FX. I'm going to go to some of the commodities specifically. and metals. Specifically, I'm going to start with gold. So, so far gold seems to be consolidating. Given the very strong move higher, you can clearly see it here. I mean, started in summer of 2018, and it's been a one, and one trick type of market. It's had only two types of trading since August 2018, either higher or consolidating its gains. So you can see this type of a formation repeating itself multiple times in the process. Higher consolidation, higher consolidation, higher consolidation, higher, another consolidation. The only exception was this rather sharp move lower, but it was extremely short-lived. I mean, it lasted, what was it, like 10 trading days, something like that. Higher consolidation, higher, and a larger consolidation. Now, within the context of this consolidation, I think there is still a chance that we can see a lower low, meaning a push towards the 1800 to 1820 support area. But I strongly believe that gold has a lot more to go to the upside, which means that one way or another, I believe that buying the dip here or buying the breakout, if you don't get another dip, is the way to go, and not trying to find areas to short it. It is extremely telling, and it's one of the easiest ways to determine which is the direction of the trend. It is extremely telling that, look at the momentum of the move, of the prior move higher, and look at, despite having consolidating, corrected lower since the beginning of August, look how little we've retraced having to do with price. So, this type of price action, slow, choppy, overlapping, is, in the vast majority of the cases, a sign that the market is just taking a breather before it resumes in the direction of the prior trend. In this case, the prior trend was clearly higher, so I think that's where we're headed. I think that the higher high, a move above like 1940, is more or less going to be, and especially 1980, is going to solidify that we've resumed the upside, in which case I'm expecting higher highs, new all-time highs, and I think there's more to go. This is the case with silver as well. Admittedly, silver doesn't look that good in the short term as gold does. So silver looks more like it wants to produce one more low before it moves higher in comparison to gold. But in any case, I do believe that the huge breakout from this long-term bottoming formation, you can clearly see it here now that I zoomed out, clearly tells us that as long as we trade above 921, but even 19, you can say, this has been a major development in this market, major development, which you cannot and you should not ignore. So admittedly, there is a case to be made in the short term for short silver positions, but as I said before in gold, I would rather actually buy this market lower than try to sell it and look for lower prices. Now, one market that we've been closely following, and the reason I'm mentioning it following silver is because I think that they have something in common. They've both built long-term bottoming patterns, is the market of natural gas. So we've been closely following it on our daily webinars in ForexAnalytix. And as Blake mentioned at the beginning, our daily webinars are free. We have a 1-hour webinar followed by a 30-minute interview that's free on a daily basis. You can register if you go to ForexAnalytix with an X, right? There is a segment that says webinars. This is the free webinar we're talking about. The face webinar, all the other webinars are for members only, with the exception of this one, but that's a Spanish one. If you speak Spanish, you can register for that as well. So you register there for free and you can watch it on a daily basis. So we've been following closely natural gas. I actually made quite a good amount of money trading the first breakout that we had here from 205. And then, unfortunately, I didn't manage to buy it because I didn't like the way it was falling, so I didn't manage to re-enter the market. But we had talked multiple times about the importance of 290, and that if we break through 290, then that's a very bullish signal, and it shows that we've broken through the long-term consolidation bottoming pattern, and I think we're going to be going much higher. And I think that's what's happening at the moment. So I think the next stop is at 375. So I do think that this market has broken out. Crude oil, on the other hand, has been doing the exact opposite, meaning it has been consolidating its gains since it found the low at roughly $11.50. Keep in mind, this is a continuous contract. That's why you don't see the minus 40 that we had a few months ago, because this is not the futures. This is a continuous contract. I'd rather plot my technical analysis on crude on a continuous contract because it's much easier to do. It has a lot less violent moves and a much smoother to analyze type of price action. So we've seen this move higher from $11.50 all the way to 43 plus, and we've now been consolidating. So it remains to be seen if this is a consolidation following the first leg lower that needs another leg lower before we are done correcting, or this is simply some type of a triangle, in which case we should, move to new highs once we break through this trend line resistance before we see a deeper correction. So the jury's still out. I'm not sure which of the two scenarios are going to play out. But as in the case of gold and silver, I'd rather buy weakness than try to sell this market. I think that anything that has intrinsic value will eventually gain quite a lot against the US dollar. And in my opinion, despite all the worries that we're going to phase out, we're going to phase out crude oil and all its derivatives, I think it's very premature. I think that crude oil can still move significantly higher before something like that happens and it gets replaced by renewable energy sources. So that's my point of view on this market. Let me see if there are any questions.
Well, it doesn't look like we have any, Steve.
Okay, so I think this is a
great analysis.
Yeah, I think this is a decent recap, and if anybody has any questions, this is your opportunity. Otherwise, we'll do it again next time. And as I said, you want this with even more members of ForexAnalytix on a daily basis. The only thing you have to do is register to the Face webinar for free on the ForexAnalytix website, and then you'll get to hear from us, every morning.
Yes, we do this every day, and if you're interested in the analysis and you like what you hear, you could come and check out our website at ForexAnalytix.com. That's with an X at the end. And if you'd like to take a 10-day trial, it's just $1. And
True.
if you use code FAJP, you will get 20% off if you purchase one of our plans.
Very true.
So that's
awesome.
it.
Awesome.
All right. Sounds good, guys.
Great.
Thank you,
Thanks
guys.
for coming on.
Have a wonderful
Thank you,
day.
everybody, for coming today. And we'll be back next month. So we hope to see everybody then. Thank you very much. Talk to you soon.
Thank you, Joe. Thank you.
Bye,
Bye-bye,
guys.
everybody.
Bye-bye, mate.
Bye, Steve.